Hi, I'm Steven. I'm from Cashflow University, and I'm going to step you through our recent trade that we completed on Robinhood. We used a call credit spread to enter into a bearish trade, and I'm going to give you the full trade analysis. Our call credit spread that we did on Robinhood, we entered it in on January 2nd, 2026, and we exited on January 8th, 2026. That took us 6 days to complete. We got a profit of $45 per trade. We only had to risk $240, and that gave us a realized return on risk of 18.8%. What I'll do now is I'll step you through how it looked on our Discord, give you the chart, and then I'll give you a wrap on the trade. This is the trade alert that we issued. It was actually issued on December 31st of 2025, so the last trading day of the year. We entered a bearish call credit spread. We noticed that hood was starting to break down and top out here as it was trading after that nice sustained bull run, and it started to lose momentum up here at around the 150 range. It pulled back, made another run, and it pulled back here. This is when it started to make equal lows. All three of these through here were testing that support level, but then it started to break down, and it showed us that there was room to go below this lower low that it had established here. And after it came back down one more time and two more times, at this point here, what it started to do is enter into a break of structure, showing us that there was more room for hood to go to the downside. And as we enter into the trade alert, this is what we posted as the trade alert for our Robinhood trade. We wanted to use the strikes 121 and 124. And at that moment, Robinhood was trading at 115.45. We're the January 9, 121 call option, and we want to buy the January 9, 124 call option as our top hedge. We were able to enter this in for 60 cents per share, and that would total out with one contract. It would be $60 per contract. Our probability of profit is 72%, and our probability of touch is 55%. Probability of touch is the probability that the stock will actually touch or exceed the short strike that we have here on this call credit spread. Now we look over on the other side, our technical analysis. We know we're below our 50-day moving average. We're down by 10% off that moving average. And our MACD is actually being bearish for us. And we can look down below and see that there's earnings on February 10th, which is almost a month away at the time when we entered this trade. And if you're curious and you want to see how they did on their last quarter, we have that as well too. We pulled that information and post that so you can see on their last earnings report, they beat both on the top with revenue and on the bottom with their earnings per share. Now what we want to do is bring across over the chart that we have here today. And this allows us to zoom in a little more and kind of see how this all played out. And you'll see how that probability of touch really came to be. So yeah, this is the break of structure that we saw on December 31st as that wide candle extended down below and it broke the previous low. That's a bearish signal in our books. And so what we want to do is take advantage of that and take advantage of this continuing downward trend on Robinhood. A few days after, it actually bounced up real nice against our trade. So I guess it's not really nice, but it bounced up with some strength and it got up to the 123 area, and it actually went the next day, it jumped up to 124. So yeah, it's getting really close to our probability of touch. We were trying to say that, hey, it's not going to exceed 125, but it pulled back right away and it continued to go back down, getting back down to that 115, 116 range. Once we got back down to that 115, because we're only trading a few days out from January 2nd to January 9th, that was enough to convince the market that we were right. And we were able to close that trade out for a 15 debit. So we sold it for 60 credit and we bought it back for 15 credit. And that gave us our $45 worth of profit on our hood trade. Another thing I can show you is this is our website that we have with CFU. If you go to joincfu.com and over here, you can click the membership button. This allows you to log into our members only website. You do have to be a paying and active member of CFU in order to access this. And we do that through authentication. Once we log in, you can see we have this nice membership dashboard. You can see our current positions and our trade book journal. You also have our trade book where you see a full breakdown of every trade that we've entered into with full details. And if you come over here to the PCS 100, that's where we had the Robinhood trade. And you go under our closed positions, and here's Robinhood, that call credit spread that we had just exited. with our full breakdown there. And that's the full breakdown on our Robinhood trade that we executed for 18.8% return on only 6 days. Very good, very well executed. If you're interested in learning more about Cashflow University, go to joincfu.com. We do offer services like our trading Discord. We have a YouTube channel, a blog that's very active with good information, and also our newsletter, which you can sign up for. That's the full breakdown of our Robinhood trade that we were able to execute for profit. If you would like to learn more about Cashflow University, head on over to joincfu.com. We offer a trade Discord in our community, a YouTube channel, which you're watching right now, our blog, and our newsletter as well. All can be found at joincfu.com. We're a very active trading community, and we've been around since 2022, and we have over 1,000 members that trade with us each and every day. Thanks for listening, and we'll be back with more trade breakdowns for you in the near future.